Hey folks, Dan Frio here with your real estate update for today, and today is December 20th, 2023. It's just 5 days from Christmas. Holy yikes. So in today's video, there's really not any economic news coming out today. Now tomorrow and Friday, we got a lot of news coming in, so I'll be basically giving you the economic data at that point. But on my way in this morning, I got gas. And gas prices were $2.79 at Costco, and I'm like, $2.79, and I'm getting to something, folks. Don't turn the dial just yet. I mean, so I'm like, okay, gas prices not too long ago were $5. Why is now gas prices $2.75, $2.79? Well, that's what I'm going to teach you today. I'm going to teach you just the basic economics of stuff. Okay, the reason being is, let's say for example, you're driving down the street and you saw a car crash. Okay, what are you going to do? Well, you're going to sit there and stare. You might even pull over and see if everybody's okay or whatever. Or you're driving down the street and you see a burning house. You pull over and you're just watching and watching. It intrigues you, okay? Just like the news. You watch the news on a daily basis. What do they start with? They don't come out and say, well, there's a Good Samaritan award today was giving to Mrs. Jones because of all the stuff that she does for her community. No, you don't see that stuff. What you see is 4 people were shot, 1 person kidnapped, these people were sued, this person, there was a bomb blowing up here. The reason why it intrigues you, you're rubbernecking, you want to see that stuff. Unfortunately, a lot of that stuff, especially on mainstream media and YouTube, it's just inaccurate. Okay, because they want your shock and awe, they want to get your views, but a lot of the information is just bad. Okay, so today what I want to explain to you is how the housing market or why the housing market isn't going to crash. So don't turn the dial because you're going to find out something really educational today. I want you guys to learn. So if you're not interested in what home prices are going to do, or you don't really want to hear the crash video, go ahead and turn the dial. But I think you're going to find this not only amusing, but you're going to find this very educational. So what we're seeing on the screen right now, these are the top 6 products people use when they're buying their first house. Okay, Mortgage News Daily does a fantastic job. They survey mortgage lenders all over the country and ask them these 5 questions. They ask them, if you have somebody that's buying their first house, it's their primary home, they're going to live there, and it's a single family home, they're going to put down 20%, and they have a 740 credit score, what would their rates be? That's the averages right through there. Okay, what can you get because you probably aren't in that scenario? You probably don't have a 740 credit score. You're not putting down 20%. So if that's not you, I'm going to give you all my information at the end of this video so you can reach out to me so we can figure out what kind of rate and can you even qualify for a home. But also, if you've locked in and your rate is much higher than these rates, reach out to us. I'm going to give you at the end of this video, I'm going to give you a link that you can upload your loan estimate in. And if you don't know what your loan estimate is, at one point when you do get pre-qualified for a loan, you're going to get one, okay? What the loan estimate is it basically gives us the purchase price of your home, the loan amount, the interest rate, the terms, and the fees. And I'll stress the fees because the fees are really, really, really important, okay? So that's what I'm going to give you all this information at the end of the video, or you can just fast forward and get that information here next. But what we want to talk about on a daily basis, or what I do talk about on a daily basis, is the economic news that's coming out. Today, there's really not much of anything. Consumer confidence, it's plummeting. Existing home sales, I don't think there's going to be a shock and awe there. And crude oil inventories. Crude oil inventories, that's what we were talking about because I just went over what in the heck's going on with my gas when I just filled up my tank. So let's use that as an educational tool. So let's go back to right here. When you look at oil, well, you want to look at the inventory and the demand, okay? In this case, we're looking at this, or let's basically read what they're telling us on the screen. This says, if the increase in crude oil inventories, is more than expected, okay, it implies weaker demand and a bearish crude price. Okay, so if you have way too much of something, that means people aren't gobbling it up, aren't buying it. Thus, what's going to happen? The prices have to come down. However, if the inventories of crude is less than expected, you don't have as much, what's going to happen? It implies greater demand and a price increase, bullish in prices. Okay, so let's get over to what prices have done. So here's what oil prices have done. Just in the last, just in the last couple months, oil prices went from $4, or gas prices went from $4 almost, well, now it's in the 2s. Okay, so why? Well, because there's a bunch of inventory and demand is coming down and down and down. We have an economic slowdown in the US, we have it in China, we have it all over the world. So that's what's going on. So let's get over and just give you a history lesson on housing, okay? In housing, what happened? Well, back here in 2008, We had huge supply of houses. Why? Because everybody was getting foreclosed on because of subprime mortgages. So everybody and their mother's putting their house up for sale before they lose it to foreclosure, or they might have lost it in foreclosure. Okay, so the amount of inventory kind of spiked high. What happened? Well, you have too much of something, just like the oil criteria said. If you have an increase in the inventory, that means implies weaker demand and bearish for prices. Okay, so then we go over to here. And this means you had a ton of homes on the market. Why? Well, because people couldn't afford them, so you had way too much inventory that would drive down prices. Okay, so let's fast forward to where we are right now. With this line right here is the median, if you break a line right in the middle of all these. So this is basically the trend. So if you look back from 1969 to now, the trend is this, and it's upward. Let's see where we were so far above or so far below this, what happened? Well, you're way above it. What happens? It crashes. You're way below it. What happens? It increases. This is in basic terms. Over through here, it was catastrophic. Home prices plummeted and everybody bought up the market. They bought. What's happening now? Well, you had a feeding frenzy just a couple years ago because interest rates were so low and people had a bunch of money from COVID and stimulus and everything else that pushed up prices. What are we seeing now? Well, we're seeing the inventory come down, but what this is telling us is there's no inventory now. So that's putting a layer, basically a floor on home prices. Okay, that's basically your economic lesson for today. So when people come out and say housing prices have to crash, well, they're not going to crash because you don't have the economics 101 dynamics behind it. There's not enough inventory. The demand is there, but it's not robust, and you have no inventory. So basically, it's just going to be flatlined. So that's it. So let's get over now, based on the data that we have, which is really nothing today, what's going on with mortgage rates? Well, a lot of people follow, and I even talked to a few people yesterday. They're like, well, the 10-year Treasury is doing this. And I'm like, you can't watch the 10-year Treasury. What happened in the past was you could take the 10-year Treasury right through here. Let's just say it's averaging 4. And you can add 1.5% to 1.75% to that, and that should give you where rates are. In history, that's basically where mortgage rates would be. But there's been a huge disconnect, as you know, because if this is let's just say 4, you add 1.5 to that, the norm increase that you normally see to bring you up to mortgage rates, that means mortgage rates should be at 5.5. 5.5. Where are we? Well, we're over here. Okay, so there's a disconnect. There's about a 200 basis point spread on all this right now, or 180 basis point spread on this, the differences right now. So what you need to follow truly is to figure out what's going on with mortgage rates is the MBS market. Okay, the MBS market is basically mortgage-backed securities. It's a bond that trades on Wall Street that provides you what's going on with mortgage rates. Okay, this is the yield on this bond is the biggest component of your mortgage rate. Okay, so what you follow is the price of the bond. Here's the price of the bond. Here's what's happening. So right now we have a uptick of 6 basis points. Okay, so what you want to see on mortgages or bonds, if the price goes up, yields come down. Okay, so if the price of this bond is going up, it's up 0.06 right now, that means mortgage rates are coming down. Let me explain it to you in its simplest forms. Let me show you how when the price goes up, how you get lower yields. Okay, so let's say this. Next year, I'm buying this bond from you, and next year you're going to give me $100 back. Okay, that bond's face value is worth $100. Okay, but today I pay you a low price. So today I give you $50 for that bond. Next year I give you my bond back, and you give me my $100. Okay, so I gave you 50, you gave me $100 back. What's my yield? What was my return on that? It doubled. I doubled my money. So it was 100% return. So that means the rate is 100%. Okay, but let's flip this. Let's push the price up. Okay, so now in its simplest terms, let's say that bond still is worth $100 at its maturity. Well, let's say today I give you $100, and then next year you give me my $100 back. It's like, okay, Dan, why would you do that? You didn't get any returns. You basically just washed. Yeah, that's what I'm saying. The price, if I pay you a higher price, it drives down my yields, my rate of return. That's why we watch this, because this is a bond that trades on Wall Street. If we monitor the price, we actually know what's going to go on with the rates or the yields. So that's my report for today. So now let's get over to it. If you're out there and you're thinking, okay, Dan, I'd love to dissect to see if I can buy a house in 2024. Okay, do I make enough money? Is my credit score good enough? And so forth. Love to help you. But if you're already locked in, let's say your rate, and you go through it and your rate's 7.5 and you're paying $3,000 in fees, and you're like, Dan, these rates are much lower than what I have. What can you do? Well, you're going to go to my website, here's what you're going to do. And we just added a new feature up there. It's the loan estimate. What you're going to do is you're going to click that button, and it's going to take you right here. It's going to give you, I need your name, your phone number, your email address. I need you to tell me how you want me to contact you, because I don't want to call you if you don't want called. Okay, so tell me how you want me to respond. And what I'm going to do is I'm going to analyze your loan criteria with up to 60 different lenders in throughout the country to see, is there a better rate out there for you or lower fees? And most of the time the answer that we're getting back is yes, we can get you lower rates and lower fees. But if you're out there and you're just saying, Dan, I just want to get started on this, what can I do? Well, there's 3 things you can do. One is right through here. You're going to see apply now. Just click it. It's going to ask you a series of questions. Based on those answers to those questions that you provide us, we're going to assign you to a mortgage specialist that specializes in the loan that you're looking for. Or if you're at the rateupdate.com, use some of these resources. There's so much calculators up here, blogs, everything else you can use. But if you scroll down, there's other ways you can get a hold of us. You go down through here, you're going to see mortgage calculators and the whole mix. But if you get to the bottom of this, what you're going to see is 2 things. One is our 800 number. And 2 is my email address. So this is my email address. Yes, I will be the one responding to you. In most cases, I respond in video form, kind of like this, so you get more of a feel of what I'm talking about, and I can explain it a little bit more in depth to you, usually in video form. So please reach out to us. We would love to help you if you're trying to kick the tires to see if you can buy a house in 2024. So that's it for today, guys. God bless. We are going to do a live event this afternoon. We usually do it this evening. I can't do it this evening, so we're going to do a special event midday today. So please, if you're not a subscriber to my channel, please subscribe down below so you get an alert letting you know that we are going live and we're there to answer all your home buying questions. Me and Kyle Seagraves of Win the House You Love. God bless, guys. Thanks so much for watching. Sorry for a long video, but I hope you found it worth it. Take care. I'll see you later this afternoon. Bye-bye.